Hey traders, it's Jeffrey from Ninjacators. Today, let's talk about mastering technical analysis, how to read charts for profitable trades. As many of you know, there are two kinds of analysis. There's fundamental analysis. That's typically for equities where we measure the value of a company's financial situation, the current market conditions, current economic conditions. It's a way to study anything that can affect a security's value from the macroeconomic factors such as the state of the economy, the industry, or the sector conditions to microeconomic factors like the company's management. And for those of you that are investing in equities, that's how you determine whether the security is undervalued or overvalued so that you can determine whether or not you'd like to take that trade, hold that stock, or go ahead and sell. But for us, for today, we're going to look at technical analysis. Typically, technical analysis is used to pick short-term direction of a security. So for our day traders, scalpers, or even swing traders, that's what we're focusing on. It's the study of charts, past price action, and some indicators so that we can predict that price movement. There are three elements. Typically, we're looking for trends, patterns, and the movement of certain indicators that we find useful to get to kind of give us confirmation of our conclusions. Now, the first thing we're going to look for are trends. They really are the foundation of technical analysis. Many of you have heard the expression, the trend is your friend, and that's going to show the overall direction of which way an underlying instrument is moving, whether it's up, down, or sideways. So for example, looking at this chart here, we've got a couple of trend lines that were drawn by drawing a line from the peak of this bar through the peak of this bar and then straight down, okay? And then a little bit further on, we've got two other peaks, okay? So these are two valuable trend lines that have already formed within just the last short period of time. And then, as I said, they're going to show the overall direction of which way the instrument is moving. We measure trend and by drawing these lines in a specific time period. So you may find that if we look at different time periods, this is a 1-minute chart. If we look at a 5-minute chart, it'll be slightly different. And it's a good idea to mark your trend lines on several different time levels. 1 minute, 5 minute, 30 minute, for example. When you see a confluence of those trend lines, then that gives you additional confirmation that the trend is moving in a direction that you're predicting. Now, how do we recognize trends? We look for something that we call either higher highs or lower lows. So for example, in this nice uptrend from this morning, we'll see a high and then a low, coming to a higher high, a slightly lower low, higher high, lower low. You'll get to recognize these easily with time and practice. And for this downtrend, we've got a high, a low, slightly higher high, and a lower low. Higher high and the lower low. So that is generally going to show you the direction. When we see a break in price action, okay, when we've broken a higher high or a lower low, then that's an indication that the trend may be changing. And how do we draw them? Well, it's simple. We draw trend lines by connecting, for downtrends, the lower lows or the troughs, or for uptrends, for downtrends, we connect the peaks. So for example, right here on this downtrend, we're going to connect this peak to this peak, and there's a nice downtrend. Slight downtrend over here, or for the troughs, we would connect these right over here. In addition, trend lines can give us an indication of support or resistance. So for this downtrend, as it comes down, price moves back up, did not break through our trend line. It bounced right back off of it. So we could have used this as a point of entry or resistance as we continue to come down. Now next, let's talk about support and resistance. Typically, price moves to areas of consolidation or support and resistance. So for example, here you've got a nice area of support that price continued to come down to. Okay, an area of resistance or support again here, and over here. These were drawn earlier by me. Let's just back that up. So for example, this was a very prominent area of support or resistance. We had a peak and then a drop right over here, and then price really consolidated around that for a period of time and came right back to it. So you definitely want to look for your support and resistance areas. Mark those in advance. That's part of your daily technical analysis. And then a combination of your support and resistance as well as your trend lines are going to help you determine and see patterns that develop. Now, patterns, once a trend starts to form, they appear and when support and resistance and trend lines are drawn in. Okay, for example, a downtrend line converging on an area of support forms a triangle pattern toward a point where it may break and indicate a potential entry short. Other patterns like flags or channels or more are easy to draw in. We have indicators that will actually draw them for you, so they will pop up and help you determine valuable areas to jump in for trades. And last, let's talk about indicators for daily technical analysis. Indicators are something that we add on to our charts for additional confirmation of price direction, okay? And they can also give us an indication of overbought or oversold conditions. Those are reasons for us to take additional trade entries or exits. Now, don't rely solely on indicators. You're going to use them as confirmation tool for your underlying impression of price movement. Too many indicators on your chart is going to be confusing. There's an expression called analysis paralysis when you have too many indicators on your chart. It leads to indecision and delay taking your trade, so don't overdo it. A few indicators are helpful, and the most common ones, as many of you know, are indicators like moving averages, the RSI, the MACD, Bollinger Bands, stochastics. You see some of those right over here. So finally, don't use your technical analysis in a vacuum, okay? The most success in trading comes with a good grasp of the character of the instrument you're trading. Practice in sim for a while until you get an idea exactly how and the character of how movement occurs in different instruments. NASDAQ moves differently than the S&P, as does the Dow or gold, okay? So watch, practice, and trade in sim, okay? And then once you've practiced, make sure you're practicing good money management, and above all, be patient. Don't overtrade, take your time, choose your trades wisely, and then the combination of technical analysis as well as learning price action is going to slowly lead to the most successful trades. All right, that's it, traders. Look forward to seeing you in our live Zoom sessions. Check into your Fast Track hub, and you'll see all the sessions we have each day of the week. We're happy to answer any questions there and tell you about all of the different indicators that we've got. Thanks, and good trading.